If you're refinancing your home, one of the most important documents you'll receive is called a loan estimate, or LE for short. The good news? Every lender is required by law to give you the exact same 3-page form. That means you can compare apples to apples. In this video, I'll walk you through exactly what's on each page, what the numbers really mean, and the key things to watch when you're shopping multiple lenders for a refinance. Page 1 is your at-a-glance summary. At the top, you'll see the basics: who the borrower is, the property address, the estimated property value, in this sample $180,000, and the loan term, here 30 years. Notice the purpose says refinance. Right before that is the loan terms box. This is critical. It tells you the loan amount, $150,000, your interest rate, 4.25%, and the monthly principal and interest payment, $737.91. Notice the column to the right asks, can this amount increase after closing? For a fixed-rate loan, all three should say no. Then check for special features. In this example, there's no prepayment penalty and no balloon payment. Both good signs, meaning you won't be penalized for paying off the loan early and you won't owe a large lump sum at the end. Next is projected payments. This shows your full monthly payment over time, including principal and interest, mortgage insurance, and escrow. In this case, the total is about $1,026 for years 1 to 4, then drops to $944 once mortgage insurance falls off. Finally, at the bottom, look at costs at closing. Total closing costs of $5,099 and estimated cash to close of $24,901. On a refinance, this cash to close number often reflects paying off your old loan balance, so it can look larger than you'd expect. That's normal, and we'll explain why on page 2. Page 2 is where the closing costs get itemized. There are two main buckets: loan costs, sections A, B, and C. Section A is origination charges. In this sample, $1,950, including points, an application fee, and an underwriting fee. These can vary lender to lender, so it's worth comparing. Section B covers things you can't shop around for, like the appraisal, credit report, flood determination, and tax monitoring fees. These tend to be similar across lenders. Section C is the big one, services you can shop for. In this sample, that's $936, covering pest inspection and title-related fees like the title search, settlement agent, and lender's title policy. Getting competing quotes on these can save you money. Other costs, sections E through H, covers recording fees, prepaid interest, homeowners insurance premiums, mortgage insurance, property taxes, and your initial escrow deposit. Prepaid interest depends on your closing date. In this sample, it's $266 for 15 days at 4.25%. Closing later in the month means less prepaid interest. Lender credits. Here you'll see a $500 lender credit, which helps offset your closing costs. Always factor this in when comparing offers. At the bottom is the calculating cash to close table, and this is especially important for a refinance. It starts with your $150,000 loan amount, subtracts your $5,099 in total closing costs, then subtracts the $120,000 payoff of your existing mortgage. That's how you arrive at your estimated cash to close of $24,901. In this case, money you'll actually receive from the transaction. These are estimates, and actual numbers may shift slightly by closing. Page 3 is where you find the numbers that let you compare loans head to head. The comparison section has 3 powerful figures. First, the 5-year cost. In this case, $51,932 total paid, with $13,788 going toward principal. Second, the APR at 4.537%. This is higher than the 4.25% interest rate because it folds in fees and costs. Wondering how? The APR is the truest measure of a loan's cost. The interest rate only tells you the cost of borrowing the money itself. But getting a refinance isn't free. You pay origination fees, underwriting fees, appraisal fees, title costs, and prepaid interest just to get the new loan. The APR takes all of those upfront costs, folds them in, and expresses your true all-in cost as a single annual percentage. It's always higher than the interest rate, and that gap is entirely explained by fees. Third, the total interest percentage, or TIP, of 77.28%. That tells you over 30 years, you'll pay over 3/4 of your loan amount in interest alone. Worth thinking about, especially if you're restarting your loan term with a refinance. Also, note the assumptions section. In this sample, the lender will not allow someone to take over this loan on the original terms if you sell. And note whether the lender intends to transfer loan servicing. In this sample, they do, meaning someone else may be collecting your payments after closing. And one important note on the signature line at the bottom. Signing this form only confirms you received it. You are not committed to taking this refinance loan. The loan estimate is designed to protect you. Use it. Request one from every lender you're considering. And don't be shy about asking a lender to match or beat a competitor's numbers. You have 3 business days after applying to receive this form. Keep them, compare them side by side, and save this video if you need a refresher. Good luck with your refinance. Contact TAM Mortgage today.